The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. This is really a focal point for me. Here we've got legs that have gone up in the Chapman wave methodology in daily charts, and an E and F in many cases. Some even have gone to an alternate count G. That essentially says to me, assess what you're looking at, explain it to yourself and to your listeners, and try to articulate what would be a breakout to the upside and what would be a breakdown and what levels will we be looking at. That to me over the next 2 days is probably the most important thing. Why? I've seen just too many on the brief occasions I'm looking at financial news or listening to financial news. Even when I was out early this morning and I looked at my cell phone when I went to CNBC, there was, where do I have it right here? Let me see if I've got it. Right there, it said, here we go, CNBC. Okay, so what it says, it should be here. Of course it won't, they've moved it already. That's interesting. All right, so they've moved it. So one guy says, Tony Dwyer, who's been very good, I see now that he says, stocks to pop another 10% or more from here despite trade war, rising rates, says Street's biggest bull. And another one earlier on said, one of the big bulls on Wall Street says, get ready for a 10% pullback, even though I'm looking for higher highs in 2018. So when I get to see that, I say, oh, man, let me articulate. There are moments when I say, look at the chart and don't listen to the news. Whenever I have a sell signal, it's probably the exact opposite. What I want to say is, look at the chart, but also look at the news, because there has to be a cover, there has to be an overlay, there has to be an umbrella, there has to be a cover story that is perceived by the market as being negative. It can't be like we've had for the past months. We've had like a couple of days. It can't be just a one-day thing and then you buy the dip and you look fantastic within a day or two or even the same day. It has to be a cover. It has to be something, and I don't see that right now. It has to be like China has now changed their thinking. It's not 18 billion or whatever billion tariff war it is. They're now bumping it up to 28 or 32. I don't think they can do it, but I'm just saying that's the kind of cover. Or, whoops. We've just had our first bump up in the jobs wanted, where instead of going down, we've had a bump up in the number of applicants being presented, and that's really what I'm looking at. All right, here we go. Get that lubrication for the throat. Dow down 36 at 25,546. I made a high of 25,692. And as you can see in this left-hand side chart, the MACD is still, it's flattening out. The histogram is changing now, but it's still holding positive, and that's a good sign. Stochastic's still at 86%. That's very good, above 80%, but it is turning down with the unbalanced volume. We've got some preparatory things. We've had a little while from the last peak D. We went short. We've shorted again. This one is going to have a very tight stop, because I'll explain why as we move along. But this is the second red bar in the 120-minute chart. Oh, I need to tell. I'm just, you know what? I'm going to do the show today as if I'm thinking like I was all night and in the morning, out loud. I'm just going to go from wherever it takes me. The Dow's down 38, now down 35 at 25,542. S&P is down 0.36 at 2857, and let's go from here. In the 120-minute chart, you can see what we've got here is that It's a little slow, isn't it? Is that the 120-minute chart made a peak D in the Chapman wave methodology, right at 25,692. Oh man, this hasn't happened for a long time. All of a sudden, slow. All right, it's slow. Here we go. And I've been able to put a down arrow in because you've gone underneath both the 9-period and the 9 and the 14-period moving average. What the heck is going on here? And basically what we're looking at is the 120-minute chart has gone to a sell mode, but that's only the 120-minute chart. MACD cross negative, the stochastic is negative, but this is what's really important, is that within the context, hey, I haven't had this happen in years. Look at this slowness. Just as I'm about to fully go to Comcast, instead of mixing Verizon and Comcast, I'm getting slow. No, this is just absolutely no good. Hey, did it stop? No, there it is. Okay. So the daily chart shows the MACD is okay. The stochastic's pulling back. I want to quickly discuss the weekly chart. The weekly chart is in leg E, just a slight move above the peak D that was made at 25,587. So far, the high is 110 points, 105 points higher. And we've got 1.5 days to go before the week wraps up. It's in leg E, it's in the rectangle formation. E is where D and E, especially a very quick going from peak D to a leg E that becomes a peak E. That's usually the tip off for a pullback of some meaning in the weekly chart. But in the meantime, we've barely pulled back 25,692 to 25,50 right now. It's just no big deal. However, if the Dow was to close by Monday or Tuesday, if the Dow is closing below 25,450, that is a big deal in the short term, not the weekly chart at all. We have to wait a whole week for another Friday close to see where it closes. Monthly chart is still good. Now let's go to the S&P. The S&P right now is trading at 2857. It is down 0.02, and you've got three little candles, a gap up, and then three little candles. This is saying it's holding very well. Holding very well is not good enough. It needs to power into the 2865s to the 2872 by about Tuesday of next week, because if it pulls back below 2847 to 2843, that key support level, the 9-period exponential moving average, says a close below that would confirm, and this is going to lead to the question I had in the den about the IWM weekly chart, that would say this is not an alternate count F/B, it is a peak F if there's no new high by Monday or Tuesday, maybe even today. Today's Thursday. But if instead there's a pullback, that says, okay, probably if we're starting to trade at 2842, that's not a B, that's a peak F. Now you're in for a short-term pullback. Right. Weekly chart, very strong, just under the 2872's all-time high. But there's still a bit of a way to go. Weekly chart is good. MACD is good. Stochastic is good. Monthly chart is good. And those are the levels to watch. Let's just do this as we're about to go to the break. The QQQs, why? This is really important. The QQs are up 23 cents at 182.26. 182.93 was the previous high. That makes a V-shaped recovery important, and it makes the leg D going to a peak D in the weekly chart very important, and I'll explain why as soon as we get back. Dow's down 29.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated folic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi everyone, we're back. So we're looking at the QQQs. It's a chunk I want to look at. So let's go. I'll take questions much later on. I just need to get through to this. So this is a single leg A. In other words, it's been 1, 2, 3, 4, 5, 6, 7, 8. 8 new recovery highs since the low that was made at 174.27 on the 30th. Peak E worked beautifully. 182.93 on the 23rd of July in the Qs, the NDX Trust Series, QQQs, and it comes all the way back down. But now it's come back up, and it took 4 sessions to come down from the high to the low, and it's taken these 1, 2, 3, 4, 5, 6, 7, 8 sessions to move higher. So it's taken more time and more effort. I'm looking at this, and within the context of that candle, that inverted, this is called an inverted hammer candle, right there on the week of the 23rd of July. We've come back. The MACD is still good, and the stochastic is starting to weaken, but still at 88%. It's good. Monthly chart is still fabulous. So it's numbers that I'm looking at. It's news and numbers. Why news? Because in order to have the volatility index spiral from where it is now under 11 at 10.85 into even the 13s, you would have to have a Dow 250 to 300 point pullback. You'd have to have the S&P down 30 points. You'd have to have the Qs pulling back about 2 points, 2.25 points to really get that change. And we haven't got any sign yet. And therefore, you have to have the bad news that kind of just involves, it's like a dark cloud. You know, you got a beautiful sunny day like we had yesterday early morning. All of a sudden, tennis time, it comes, the clouds come. No tennis because of the clouds. And that's what you want to see here. So what I'm looking at is the Qs need a breakout decisive into the 183.55, 184.30 area, probably by next week, even with a dip by Friday week to maybe the Monday after that, trading in the 184s very comfortably. That would be a fantastic breakout to the upside and say, you know what, the Dow and the S&P are going to visit their old highs from January now rather than later. Okay. Qs, we've just done. IWM. IWM is the Russell 2000. Very important because it has a life of its own. You can see by the chart, it was holding very well. It hasn't broken down, it hasn't broken out since the high was made back on the 20th of June, the week of the 20th of June at 170.20, all-time high. Holds the 9-period moving average, breaks under it, but manages to close above it. Only touches the black line, the 14-period moving average. Has tremendous support now between 166.20 and 164.70. But a green candle goes to this is one of the quickest peak Ds you can get if there's a no new high tomorrow. Look, the low, what a wonderful example. This is why in the very beginning when I was doing the work on that I eventually discovered would be called the Chapman Wave series, I originally called it the 7-wave series. Why? Because look, it takes a leg A, a peak A, then a higher move above A that goes to leg B, and then a peak B with a lower high. And then a leg C starts 1 penny above B, and that becomes a peak C as it goes 1 penny below the previous high, and that makes a peak. And then leg D. And we've done that. It's 1 bar later than the perfect turnaround. You've gone from the low of 164.07 on the 30th of July to leg D today on the 9th of August in 1, 2, 3, 4, 5, 6, 7, and 8 legs. Instead of 7, it's 8. Usually the 8th is the leg down for peak D, and the very quickest it could ever be 8 legs to make a peak D. This is 8 legs to make a leg D. We'll see what happens tomorrow. But it stopped dead at the Chapman Wave resistance line right there. You remember the inside track I spoke about yesterday? Stop dead right on that line. If and the MACD just crossed positive, hey, that's a good sign. Leg D so quickly is not a good sign. Stochastic at 60% is okay, but it's really lagging. So I'm watching it closely. Make it very simple. Any close above 170.21 starts a new leg to the upside in the weekly chart. In the weekly chart, I typed it in here because I was asked about it and I wanted to show exactly what I'm looking at. You got a PE at 160.63 on the week of the 26th of January this year, pulls back to 142, it's 18 points. That's a pretty deep correction, 12%. On the week of the 9th of February, turns around and goes peak A, but that peak A is a gray A at 160.30 underneath the previous high. The moment it breaks 160.63, it goes to leg F/B. Well, I went to F/B all the way to the week of the 20th of June at 170.20, pulls back, has a couple of retests underneath the 170.20 level, has another little rally. This is that rectangle mode that in a shorter time frame gets to a D. Lo and behold, we got the D in the daily. So this makes it very simple. If the IWM by Monday or Tuesday is trading in the 169.60 to 169.70 area, that's really good action. If it pulls back, takes out the low of yesterday, that's 166.50. What is it? Slow today, huh? 166.49. Takes that out by Tuesday of next week. That says rectangle formation stays in place, sideways to down action is expected. Let's go to the NYA. I want to get all this done because it's so important. NYA is the big, broad New York Stock Exchange. Made a peak F 3 days ago in the daily chart. Leg D in the weekly in this rectangle formation, way off the highs, way off the all-time high of 13,635 the week of January the 26th with the down, the S&P making their all-time highs. So this is a recovery pattern in a rectangle formation. MACD is good, stochastics at 89%. Monthly chart is good, but not great because of the potential either for a U or an arch formation, H formation failure. I'm watching this. So now it takes me to what's really important. I'm going to go to the dollar W 5,000. Question I had, hope we're talking about the same one. This is the Wilshire 5,000 total market index. This is everything, right? Well, today it snuck to another leg higher. So it makes a perfect peak E way back on the 25th at 29,651. Pulls back under the 9, under the 14-period moving average. Looks quite ugly. MACD and stochastic turn down, and then MACD flattens out. That's a very positive action if it crosses the green line closes over the red line, which it did, makes that M formation. Now you've got the second half of this arch formation, goes to a higher high. The MACD didn't. It's about a little lower than it was before, and the stochastic didn't. It's at 92% before it was in the 96, 97% area. So this says, G, with just the possibility, if that MACD holds strong and the stochastic holds at 92%, that it's not a G/B, but it becomes a B. Wow, this is really interesting for me anyway. I'll be right back. Basil Chapman, Tiger to Christmas Hour, Milestone 31. It's success punch.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
So a quick question was, should I add to MCF? This is Contango Oil and Gas. Right here, very nice move, goes from the 450 level to the 523, up 15 cents. I wonder if we're going to be looking at this kind of turnaround in some of the gold stocks and gold itself. But this is an oil and gas. Wow, that's a big pullback from around about the 685 area, 690, down to it got almost cut in half. I'm going to say, I love the candle. The day is young. If you've got a position from lower down, if you've got a position from higher up and you want to cost average, that should have been your plan all the time, that if it ever goes to the 200 period moving average in the daily of 484, even if it plunges to 450 intraday, 451, but it goes back to 523, that's fantastic action. I'm going to say in your case, I would actually take a little position right now, but this position has to have a stop, of 490. You can get in here at 523. 490 is like quite a bit of a stop, but I'm saying yes, that's what I'd be looking at. All right. And so that was the one question. Venom was the other, and then I would go to some of the other details. Venom, which is Viper, another energy stock. Viper Energy Partners, leg E, a huge cup formation I'd mentioned weeks ago in the daily, but this monthly chart has just screamed up to 37.66, up $1.72 today. Leg D in the weekly chart, leg D in the daily. I like it very much. Would I buy it right here? It's obviously doing the right thing in the right area. I would actually rather look at an option, a call option, and I pretty much want to get in the money call option for August, for August. Would I do it? No, for September. I'd be an in the money 36 call, 36.50 call, and in the money. You're paying up for it. That's only if you wanted a brand new position. That's the only way I would do this right now. But in your case, in the den, kudos to Coda for Venom. Yes, I agree, Peaky. Absolutely. Beautiful, beautiful trade. And we've discussed it for a long time. I should have taken your advice, put it in the newsletter, because look at that beautiful action. It's almost a one-to-one to the upside. If you do the standard here, TFNN, A to B equals C to D, but in the Chapman wave notation, peak D was made back in mid-July at 34. It pulls back to just under 30 and rallies now to 37. Another 7-point move. That's really good in leg D. So congratulations. All right, next thing I want to do now, I want to do this. We've done those indices. Oh, I didn't finish. Dollar W 5,000. What I wanted to say is this leg G that we're in right now, I have to call it because the MACD is good and the stochastic hasn't got that turn. You see the way it flattened out over there back in about the 11th or so of July, and that allowed it to go to C, D, and even E. Here, it's not just making one big swoon to the whoosh to the upside and a swoon to the downside. It's holding steady, and that's why I have the updated 215. I don't want to be in a situation here where my mind is saying, "Oh my God, we've got all these D's and E's. There has to be a major turnaround." If the stochastic flattens out at a high number above 88, especially in the 92, 95 area, that flattening out says there's buying intensity every time it's going to drop. It's not the arch that turns around and goes quickly under 80%. So watch this closely. The W, the Wilshire 5,000 total market index, leg D in the monthly, leg E in a breakout. Remember the rectangle formation? You can go in a rectangle formation to an inside buy, Chapman wave mode, to another D, almost two, exactly on, but sometimes slightly over the flagpole. In this case, the high that was made right here on the week of the 26th of January at 29,760. This is the Wilshire 5,000 total market index, trading up 0.14% at 29,799. The way it's acting with a little doji candle, Chapman wave silent doji candle yesterday, and now makes a new high. If it closes, especially if it closes today, especially after some kind of Fed report at 2 o'clock, if there's anything to be heard, 29,818.65. If it goes to 0.66, closes above 0.66, I would say that that's very good action, and I have to consider that it's a B, and it could have a very choppy, without breaking down, a choppy up move, not all that much higher, but chop, 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 comes back down, keeps pulling back into the 29,600s, and then makes a final pop to the upside. And eventually this says, when it comes down, be careful because it can come down really, really sharply. All right, so I hope I've got that done. Now let's go to gold. Gold right now is trading up 0.3 at 1221.3. Yes, this is an attempt right now to have a little bit of a bounce. Weekly chart's important. Monthly chart is still pretty negative. I'm just going to say two things: support and resistance. Resistance is at 1228. If the gold contract is a continuous contract trading at 1221.3, if on Monday, Sunday night into Monday, if there is a gold rush and all of a sudden gold is trading at 1234 to 1238 by Sunday night or Monday morning, then I would say finally the dollar, which is trading right now, DXY, up 29 cents at 95.38, could have a pullback. But the way it's acting, the strength that I'm seeing, I mean, we've been long since the 6th of April at 90.07. It's trading at 95.38. That's not a big deal. It's 4 or 5% in currencies. It's actually quite a big deal. Not the point. The point is that it's taken all this time in the oval pattern to pull back, to retest the low of 93, I think it was 93.71-ish or something on the weekly chart. And it just keeps refusing to, it keeps finding every excuse to break to the upside. So let's make it very simple. If the dollar by Tuesday is trading under 94.40, that's $1 down, a little more than $1 low than it is right now. It's stuck in the range. It's probably going to go to the lower part of the range as gold has a decent bounce. But if the dollar breaks above 95.65, the high of the 19th of July, starting a new leg D, that breaks out in this oval pattern, the Chapman wave stork leg formation. I haven't even spoken about this. I've been talking about this as a potential arch. Now I'm going to talk about it as if it's a potential stork leg formation. And what will happen is if it breaks to a new high, this becomes not just a leg F, but it recycles that peak E, and this becomes an F/B and says, wow, the weekly chart has a chance to break to the high that was made right there. The month that turned the moving average is negative, the month of July of 2017 with a high of 96.51. And 96.51 puts us in a different ballpark. It makes those other currencies really vulnerable, and that activates the stork leg formation. Wow, that was a lot of information. TLT as we go out, because I do want to get to all the other calls. TLT right now is trading up 51 cents. Trying to form some kind of a base here. All right, we'll talk about when I get back. Dow's down 21.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, folks. So I was asked about bonds, basically. I'm looking at the TLT, since that's the 20-year Treasury bond. I could go to the yields and all, but I think the TLT is a pretty good benchmark. See this big H, lowercase h in the monthly chart, and it's basically saying that 118 to 116 throughout the month of August better be the support, because if that gets taken out, those yields are going very much higher. On the upside for the TLT, if it starts to trade at 120, 130, now 120.80 to 121.30. And the moment it does that, I'll be looking at this and saying, yields could be coming down quite a bit, because that 122.20 level, a point higher in the weekly chart, would say, you know what? We're going to leg C, and leg C would be 122.93 or higher, the high of the week of July the 6th. I just think we're in a range right now. We're going to get some clues, I think, by Tuesday of this coming week. Really important week for me. So here's another thing. For my subscribers, I had 4 stocks earlier this week that we were looking at that we wanted to buy on the long side. I didn't actually put the trades on, even though they were kind of appealing. One was particularly appealing. We did put it on today. It gapped up a tad too much, so it didn't pull back enough. So we've missed it. It's actually doing very nicely. But one was Roku. And I thought with earnings coming out, everything about it, everything I had heard, I had it once I bought it, never actually put it together. When my kids came to visit, they always laughed and said, "Are you ever going to put this thing together?" Eventually, I just said, "You know what?" I gave it to one of my kids. But look at it. It was down in the doldrums, had a spectacular leg D from the 29 area to 53. I was asked about this, 52 actually. Pulls back, goes to a peak in the daily, a leg D in the weekly. It goes to just under 52, pulls back to 43s. Rallies a little bit. That's where I looked at it. And then I thought, I'm pretty sure everything I've heard says that earnings should be spectacular. But I didn't quite know how to do this. Probably should have the easy thing is you press the button and you buy it. We could have got it in the 46s. I just kind of stepped back and said, I don't think I want the risk of a mistake right at this time. We're trying to be focused in my newsletter on certain activities. And bam, it comes out. It was up $2 yesterday after the earnings. Then it was up $3.50, then $3.90. It is up $9.81 at 57.06. And I believe Bob got the options. You remember Bob had asked me before, Bob in Framingham, about the options. He did fabulously. Then he took them off. and I don't know, I think he might be back in this. And if he is, congratulations, Bob. I think if you were looking for the 52s. No, I'm sorry, you missed it. It's not in the 52. It's at 57.20. I hope you have the calls, and I hope you take yourself off to whatever you want to do, because that's fantastic. I mean, if you had calls on these, so the 50, if you, let's just say you bought the 52 calls, it was trading at 46. You must have got them for under, let's just say there was a premium and you pay 1.05, right? Maybe 1.20 even. I don't think so, but let's just imagine. They are trading right now, I'm sure, at $8 or maybe $7.30. Fantastic. All right. So Roku, big move up, all-time high will come if it can close above the high of December, I think it was, of last year. Right here. And that, wow, this is slow. 58.80 was the high in December, and it's getting close. All right, next, let's go run these questions quickly. Junk, JNK, talking about yields, talking about bonds, talking about the SPDR, BB Barclays, high yield, bond fund, spikes to a leg E. Wow, there are so many of these chart patterns, just like this, with the V-shaped pattern, goes to an E, and now we're going to be watching to see, is this going to be a recycle, or is that going to be pulling back? So if the yield right now is trading at 35.90, down 0.04, let's see what happens after the Fed at 2 o'clock, an hour and 15 minutes. We'll know. So I'm looking at this leg A after a trough D, a leg A in the weekly. Let's make it real simple. If it trades at 35.90 right now, if it trades at 36.35 in the next week, there's a real good chance it's going to go to 36.10, the 200-period moving average. So that's the high yield. Wow. And look at that peak E. Look at that beautiful rounding top in the monthly chart at peak E back in December, January. Wait a minute. No, that was June. June of last year? Yeah, July of last year. 37.46 pulls back. Hey, this is something to watch. Why? Because it gives us a hint that if this starts to trade under 35.50 in the next 3 days, 4 days, that is a peak E V-shaped top. It's what I call the Eiffel. This is what I call the Groucho Marx eyebrows top. You're going to watch it because there's a real good chance that it will be pulling back even steeper. If it suddenly starts to trade above close, I'd like a close, not a trade, but a close above 35.97, the high of 3 days ago, goes to, let's call it 36 or higher. That's Ohio, and that makes it, that's really quite positive. And then I have to consider, you know what, that could be a B rather than an F. So the MACD is good, stochastic's weakening a little bit. This is really worth following. All right, next question I had is less attractive as the NX, as the 10-year tops out. Yeah, so let's just watch this. I think I'll come back to it for Technical Friday tomorrow. Let's see what happens with the Fed, all right? So we've covered those things. The XAL, which is the ARCA airline index, trading right now down 3 cents, no, down 59 cents at 106.30, made a peak D top in the Chapman wave. Remember, that's what we look for. The 27th of July goes to 108.89. It's down here. Now, that's interesting. Why? Because the crude oil contract, CL, so you've got the airline index off the 124's highs that were made earlier on this year, maybe January, February, going all the way to the 200-period moving average of 98, trading at 106 right now. Crude oil is actually down, it's about unchanged, down a penny at 66.93, lousy pattern. This is the Chapman wave arch formation, lowercase h formation. Why would the transports, not the transports, the airlines be down like this? What's happening to something like a CSX? CSX, which is CSX Corporation Rails, down at 28 cents. Hey, how many charts have done this? Oh, I have to tell you, the next couple of days are really important. Does this whole thing recycle up, or are we done for now? Peak E, but it's holding at the highs. Peak F. Oh, man, is this recycled as well? In the CSX daily, weekly chart. Oh, I have to tell you, this is the most fascinating market. This is absolutely the most fascinating market. Let's look at where was the question with the airlines? JBHT. This is JB Hunt, I believe. Yep, JB Hunt Transportation. Yep, same thing in the date. Oh, look at that. Oh, it is down. It is weak. Trucking is weak. Rails are strong. Airlines are weak. What a mixed market. I'll be right back. Dow's down 20. S&P's up $1. Getting closer to the Fed's. I'll be right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
So we've just seen the E-mini go from the 2856s, 28550s actually, and run to 2860. And that's what we're looking at, because as the Fed is about to come out, remember, no matter what the Fed does, very often in the market, you will see that there is a position that's taken early in the morning, but as you get to 2 o'clock, it narrows and narrows and narrows. And it could be that it was down sharply, then it just kind of comes back, and then the market does what it's going to do, or it's rallying, and then it just fizzles and comes back to unchanged, kind of, let's wait and see what happens. So these are all just intraday trades. Now we're going to wait and see what the Fed does. So let's just go on here. A couple of things I want to look at here. IYR holding well in the upper range. This is the iShares Dow Jones US REITs Index Trust, the 81.64 up 26 cents. If this breaks under 80.75 by Tuesday, that's a negative and says sideways consolidation to probably down. But if it breaks into the 8250s or higher, that is very good action. So there are so many sectors just have to keep your eye on for the month of August. Merck I was looking at this when I did all my Dow stocks in detail last night. Look at this, an amazing move. It goes from didn't I do this the other day? 53 area just 6 months ago, to 69 to an all-time high just 2 days ago. So now it's made a double top at 67. This is the same thing. Is it going to recycle? Is this an F/B going to a C and a D? Or is this a peak F? MACD's just turned down, but still very strong. Goes to 66.99 on the 7th. And lo and behold, the next day, the high is 66.99. And today's high is 66.87. And now it's pulled back to 65.96. So, and look, a little doji leg D candle in the weekly chart. I have to tell you, this is the most fascinating market. So we'll see. The Dow up 40 or more points after the Fed announcement holds there at 230 would be good. Down 50 points. A little bit of a pullback coming here. And stay tuned for Steve Rhodes. Kate White, Donald Trump, back to jump a little across. Have a great
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.